This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices eased as much as 1% in Asian trade on Tuesday, extending losses from a 4-month low in the previous session, as investors worried about supply ticking up later in the year amid signs of weakening U.S. demand. Brent crude futures fell 73 cents, or 0.93%, to $77.63 a barrel at 0638 GMT. Brent closed below $80 for the first time since February 7, after falling more than 3% on Monday. U.S. West Texas Intermediate crude futures eased 87 cents, or 1.17% to $73.35 a barrel. It had also settled near a 4-month low on Monday after sliding 3.6%.
Portfolio investors purchased petroleum contracts for the first time in 7 weeks as traders squared up short positions ahead of a meeting of OPEC ministers to decide production policy in the second half of 2024. Hedge funds and other money managers purchased the equivalent of 21 million barrels in the 6 most important futures and options contracts over the 7 days ending on May 28. The purchases were the first after 6 weeks of sales totaling 304 million barrels since April 9, according to records published by ICE Futures Europe and the U.S. Commodity Futures Trading Commission.
Moving on to the top news in the energy sector.
U.S. natural gas futures soared about 7% to a 1-week high on Monday on forecasts for demand to rise as hot weather prompts power generators to burn more fuel to run air conditioners and as flows to liquefied natural gas, LNG, export plants increase. Traders said U.S. prices were also supported by a 5% jump in gas prices in Europe due to an unplanned shutdown of an offshore production hub in Norway. Front-month gas futures for July delivery on the New York Mercantile Exchange rose 16.9 cents, or 6.5%, to settle at $2.756 per million British thermal units, their highest close since May 22.
Venezuela's oil exports recovered in May from a low figure the previous month as state oil company PDVSA's customers rushed to take cargoes ahead of the resumption of U.S. sanctions on the South American country. The U.S. Treasury Department in April did not renew a broad license that had allowed Venezuela to freely export its oil, but gave companies until the end of May to complete transactions, including crude and fuel sales. It also began issuing individual authorizations to energy firms doing business with Venezuela. A total of 50 vessels departed Venezuelan waters last month, carrying an average 708,900 barrels per day, BPD, of crude and fuel, and 614,000 tons of petrochemicals and oil byproducts, according to internal PDVSA documents and shipping data from financial firm LSEG. Next, we have the top news in metal markets. Iron ore futures were mixed on Tuesday, with the Dalian benchmark extending losses amid lingering concerns over near-term demand in top consumer China, while hopes of U.S. Federal Reserve cutting interest rates underpinned the Singapore benchmark. The most traded September iron ore contract on China's Dalian Commodity Exchange traded 0.94% lower at 844 yuan, $116.48, a metric ton as of 0245 GMT, after falling to as low as 839 yuan a ton earlier this session. Diminishing steel demand dampened mills' buying appetite for iron ore, with transaction volumes at major ports sliding by 17% from the previous session to 735,000 tons on Monday. Data from consultancy MySteel showed.
Gold fell slightly on Tuesday after rising 1% in the previous session, as investors awaited U.S. jobs data due later in the week for more clues on the Federal Reserve's rate trajectory. Spot gold was down 0.1% at $2,348.59 per ounce, as of 0602 GMT. Prices touched their lowest level in nearly a month on Monday before settling 1% higher. U.S. gold futures were unchanged at $2,368.80. Wednesday's ADP employment report and Friday's non-farm payrolls data will be closely watched for further clues on the health of the U.S. labor market and if it will deter the Fed from cutting rates in September.
We will now look at the top news in the agricultural sector.
The U.S. Department of Agriculture on Monday rated 75% of the U.S. corn crop as good to excellent in its first condition ratings for the 2024 crop, above the average estimate of 70% in a Reuters analyst poll. Pre-report trade estimates from 13 analysts surveyed by Reuters ranged from 58% to 79% good to excellent. A year ago, 64% of the corn crop was ranked good to excellent. The United States is the world's largest exporter of corn, used primarily for animal feed and ethanol fuel. In a weekly crop progress report, the USDA said U.S. farmers had planted 91% of their intended corn acres by Sunday, up from 83% a week earlier and ahead of the 5-year average of 89% despite wet weather in recent weeks.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.